What if I told you that there is a completely legal strategy that allows the wealthiest people on earth to live like royalty while paying virtually $0 in taxes? You might think I am talking about some shady offshore scheme or a complex web of lies hidden in a tropical island. But the truth is much more fascinating and far more accessible than you have been led to believe. While you are working hard every day and watching a large portion of your paycheck disappear into the hands of the government, the elite are playing a different game entirely. They are playing three-dimensional chess while the rest of the world is stuck playing checkers. This strategy has been hiding in plain sight for over a century. It is so elegantly simple that it can be summarized in just three words: buy, borrow, and die. If you are tired of watching billionaires pay a lower tax rate than teachers and nurses, then you need to pay close attention to what I am about to share. My name is your guide through the hidden world of elite finance, and today we are going to decode the blueprint of generational wealth. Before we dive into the mechanics, make sure you are subscribed so you never miss a chance to take back control of your financial destiny. The story of the buy, borrow, die strategy begins with a fundamental choice that separates the rich from everyone else. Most people are taught to work for a salary. You trade your time for a paycheck, and the moment that money hits your account, the Internal Revenue Service takes its cut. By the time you pay for your mortgage, your groceries, and your health care, there is often very little left to build a future. But the wealthy understand a secret that the schools do not teach. They do not work for income, they work for assets. This brings us to the first phase of the strategy, the buy phase. The wealthy focus all of their energy on purchasing assets that increase in value over time without producing a regular taxable income. Think about growth stocks, high-value real estate, rare art collections, or private company shares. The magic of these assets is that they grow quietly in the background, year after year and decade after decade. As long as you never sell those assets, the government cannot touch a single cent of that growth. This is what we call unrealized capital gains. Imagine watching your net worth climb from $1 million to $10 million while the tax man sits on the sidelines, unable to collect. While the average person is getting hammered every April, the asset owner is simply watching their wealth compound in a tax-free vacuum. The key here is patience and the courage to own things that the world values. But you might be asking yourself, how do these people actually pay for their lives? After all, you cannot buy a luxury car or a new home with a stock certificate that you refuse to sell. This is where most people get stuck, and it is where the second phase of the strategy becomes truly brilliant. Welcome to the borrow phase. This is the part of the system where the magic really happens and where the rules of the game change forever. Once a wealthy individual has built a substantial portfolio of assets, they do not sell them to get cash. Instead, they walk into a private bank and use those assets as collateral to secure a loan. Financial institutions have created sophisticated products known as securities-based lines of credit specifically for this purpose. Here is the part that will change the way you think about money. The government does not tax borrowed money. If you borrow $1 million against your stock portfolio, that money flows into your bank account completely tax-free. The Internal Revenue Service treats that loan as a liability, not as income. The terms on these loans are incredibly favorable for the wealthy. Because the bank is holding high-quality assets as collateral, the risk is extremely low. This means a billionaire can often borrow money at interest rates as low as 3 or 4%. Now consider the math of this arrangement. If their stock portfolio is growing at an average rate of 10% per year, and they are only paying 4% interest on their loan, they are still making a profit. They are essentially getting paid to spend their own money. This creates a perpetual cycle of wealth. As the assets continue to appreciate, the borrowing capacity of the individual increases. They can take out larger loans to fund a lavish lifestyle, buy more property, or invest in new businesses. They are living a dream life using debt as a tool, all while their actual wealth remains untouched and growing in the background. This is how a chief executive officer can officially earn a salary of $1 a year and still live in a $50 million mansion. They are not dodging the law. They are using the law exactly as it was designed. But eventually, everyone has to face the reality of the end. You might wonder what happens when the loans come due, or what happens to all that accumulated debt. This brings us to the final and most powerful phase, the die phase. This is not just a morbid conclusion, It is the ultimate victory in the game of wealth preservation. When an individual who has followed this strategy passes away, their heirs inherit the assets through a provision called the stepped-up basis. Under current federal tax law in the United States, when you inherit an asset, its value is reset to the current market price on the day the original owner died. This means that all those decades of capital gains, the millions or even billions of dollars in growth, simply vanish for tax purposes. The heirs receive the assets as if they had paid the full market price for them on that very day. They can then sell a portion of those assets to pay off the outstanding loans that were used to fund the previous generation's lifestyle. Because the basis was stepped up, there is no capital gains tax owed on that sale. The debt is cleared, the tax bill is zero, and the remaining fortune is passed down to the next generation, stronger than ever. The family wealth does not just survive the transition, it thrives. This is how dynasties are built, and how the gap between the ultra-wealthy and everyone else continues to widen. It is a system that rewards those who own the world and penalizes those who merely work in it. The scale of this strategy is truly staggering. Securities-based lending has become a massive industry, with major banks competing aggressively for high-net-worth clients. They offer increasingly better terms the richer you become. If you have a $50 million portfolio, the system treats you like a king. But the most important lesson today is not just about understanding how the billionaires do it. It is about realizing that you can apply these principles to your own life, even on a smaller scale. You do not need to be a titan of industry to start focusing on assets over income. You do not need to be a genius to understand that taxes are the single greatest hurdle to building a legacy. The first step is a shift in mindset. Stop thinking about how much you can earn and start thinking about what you can own. Focus on assets that compound, that grow, and that provide you with the flexibility to use debt wisely. Understand that the rules of the game were written for those who take a long-term view. While the world is distracted by temporary trends and quick paychecks, you must remain focused on the horizon. Protecting your legacy means understanding the mechanisms of the system so you can navigate them with confidence. You have worked too hard for your success to let it be slowly drained away by outdated financial habits. It is time to stop playing checkers and start mastering the game of wealth. If this information has opened your eyes to how the financial world really operates, I want to hear from you. What is the one thing about the tax system that frustrates you the most? Leave a comment below and let us start a conversation about real financial freedom. If you found value in this deep dive, please hit the like button and share this video with someone who needs to hear the truth. Together, we can decode the secrets of the elite and build a future that is truly our own. Thank you for watching, and remember, the best time to start building your legacy was yesterday, but the second best time is right now. I will see you in the next video.